So we looked in part one at some kind of background information about what are the advantages of IPSAS, why should governments be doing this. Then we went on to look in part two about some of the issues that you're going to have at that kind of feasibility stage when you first start having discussions with your clients. So what kind of situations are they in? Would they be better going for cash? Would they be better going for accruals? And so on and so forth. With session number 3, we're just going to do a very little brief 5-minute, 10-minute background on the kind of accounting systems you can expect to see, assuming that they have a standard, what we call a standard 3-pillar system. And then we're going to go on and look at what the actual barriers are to implementation. So that's what we're going to be doing just now. Let's look at that system then. A 3-pillar system. For people who work in the kind of computer environment, for people who work in government accounting, this will be fairly basic information. But a standard government system consists of what we call the 3 pillars. And the 3 pillars are the budget, the treasury, and the accounting system. We can define the 3 different pillars in various ways, but in different kind of ways. When I say various ways, but different kind of ways. Firstly, in terms of the legal system, certainly as far as the budget goes, the budget is going to be your key legal document. The budget is, as far as the legal system concerns, the way in which the government fulfills its obligations to its citizens. So whatever type of government you've got, even if it's an authoritarian government, they're making statements to the citizens: we're going to be collecting taxes from you, this is what the taxes are going to be spent on. And the budget therefore sets out how those sums of money are going to be spent, down to the point where, at a sort of over general level, to what the actual number of dollars are. Because of the importance of the budget system in terms of the legal process, the budget system is usually the key document. So there will be a strict legal form that says what format that budget has to be in, when it has to be announced, whether there are any restrictions over whether or not you can transfer sums of money from one area to the budget to the other, whether there are limits on the amount of the total cake has to be divided up through education or whatever, and so on and so forth. And looking at the world, most developing countries in the past 20 or 30 years, when they start looking at reform of the financial system, they will be looking at reform of the budget system as a first step, because the budget system will drive everything else. You have the budget, you say we are going to spend 10% of national income on education, and then what happens then is that we have to go through the process of spending against it, and then we have to measure what's been spent and whether anything left over. So if you're looking at feasibility studies, if you're looking at starting to work on IPSAS, it might not be obvious that this has anything to do with the accounting system at all, but you have to sit down and understand the budget legislation process, and you have to understand whether the legal hooks and claws are in that process, because there's no point in making recommendations on how to upgrade an accounting system when every time you do it, the legal department turn around and go, the budget doesn't permit you to do that, the budget doesn't permit you to do that. It's going to be a very slow, frustrating, and ultimately humiliating experience for you. And it's all in there as well. You kind of need to know it. And I guess as an extension of that, that brings us back to this idea of the value of really good quality local people, because they're the people who will be able to guide you to it. Particularly if you're working in a country that has a language with a different alphabet or something, so you can't just pick up the stuff and read it. So, bearing in mind and looking at our 3-pillar system, the first pillar will be the budget. You have to look at how the budget works. As it says on the slide, for almost all countries, if you're looking at the 2014 budget, the thing has to be prepared, signed, sealed and delivered before the 1st of January 2014. You also need to consider what are the processes for budget revisions, because every country in the world has budget revisions. If we come away from the legal system and look at the ERP system, the ERP, the computer system, will reflect this as well. There will be a budget pillar within the ERP system, which will control funds of money attracted or attached to certain spending headlines, and then as that money is spent, it will be matched with the budget, so that the lawmakers can see how much of the budget's actually being spent and at what rate as well. Remember, if you've got money set aside for snow clearance and it starts disappearing in August, you need to know about that as well. So therefore, therefore we have this idea of the ERP system as well. Now you must take note of the budget system, and you must take note of the budget coding system, because the accounting system has to match the budget system. Otherwise, when you start preparing your accounts, they look beautiful in IPSAS, but if you can't match them to the budget, you can't possibly comply because you don't know what you spent. So spend a good chunk of time getting some good advice on that budget system and how you work with it. It is perfectly possible as well that you are going to end up having to make recommendations to change the budget system. So then you need to go down and see the lawmakers to go find out what the process is for getting that to happen. In many countries, getting changes to the budget system, which you need, or changes to the legal system and so on, going to take you a couple of years. So make sure you know all of this. Right, that's the budget system. The second thing that you've got is the treasury. Right, the treasury is just purely your current account. So therefore, in the treasury, we are looking at sums of money coming in and sums of money coming out. It is a monitor of the Treasury Department, and the Treasury Department will set, therefore, spending limits by budget lines. That is going to affect your procurement, because if you're trying to purchase fixed assets and there's a budget limit on fixed assets, you won't be able to buy them. The other thing that happens is that you get approval to spend, but you can't spend now because the money isn't available. Remember that in any treasury system, the lowest sum of money you can spend is the lower of approved budget or cash available. So you need to look at the timings as well. Treasury typically has to be handled with kid gloves, because all the treasury is interested in is cash. What cash have we got coming in and what cash have we got going out? So therefore, when you start talking to them about accruals basis, you will find that the treasury will get very, very nervous about this. Okay, so we've got this idea of we've got the budget system, and we've got this idea that we've got the treasury system. The other thing that the treasury system will normally include somewhere along the line is some mechanism for recognizing receivables and payables. Certainly, if the treasury system is linked into the centre bank, so therefore that we're raising money through debt issues or we're borrowing money in international bond markets, then the treasury is also going to be the place to see this. So therefore you need to look in your treasury and see your subsidiary ledgers for your receivables and payables. Bearing in mind that what we're trying to do is to make our implementation as easy as possible, if we're going to end up with some sort of 10-year program where IPSAS is going to happen after 10 years, but there's steps in the program, in terms of setting your milestones, if you've got an asset group that monitors your assets, if you've got a treasury function that monitors your receivables, your payables, your financial instruments, you can start bringing these things in as early adopters of your milestones, because they will be there at that stage. So, three-pillar system. The first one is the budget. It will set expenditure limits. Those expenditure limits are almost certainly going to be controlled in law, so have a look and see what those law is. There may also be various gearing levels. There may be things like thin capitalization, where whether we're using debt or whether we're trying to fund anything through equity issues and so on. Then look at your treasury, bearing in mind that your treasury is always only going to be interested in cash. So your treasury is going to be the place that you're going to have to try and win these guys over. Right, now let's look at our accounting pillar. So treasury and budget were covered in the last slide. It is obviously with great amount of disappointment that we as accountants think that the budget is the most important, treasury is second most important, and accounting is third most important. But that actually tends to be the way. So your accounting statements therefore will come after everything else. It also has to be said that for countries which have a very, very low level of discretionary mandate, so in other words, government departments are pretty much told what they have to buy. There are replacement cycles for computers, replacement cycles for cars. The level of money that they get to make decisions on is very low. In those kind of organizations, in those kind of ministries, you're actually going to find that basically you can, subject to budget revisions, take the budget at the start of the year and then turn it into a set of accounts, and it'll almost be exactly correct at the end of the year. This happens because people just don't have a choice of spending, so therefore we already know what they're going to spend on. Or you have to look at how your budget is constructed. If the range of budget spending is very wide, so it just says fixed assets, then you can chuck anything which is a fixed asset in there. then at that stage your budget will be accurate, but your accounts will need to split that information. Right, the point of that therefore was these 3 pillars. You must understand how your budget works, you must understand how your treasury works, and then when you're planning your accounting has to fit in with those 2 things. The worst thing that you can do is take the view that where the accounting now is IPSAS implementation is more important. Design a complete new chart of accounts, design a complete new accounting coding system, and then at the end of the day turn around to the budget people and say you have to change to match the accounts, because they won't, and that will be an argument that you're always going to lose. So in your accounting therefore, try and make sure that your codes match the budget system as far as possible, so that mapping at the end is as easy as possible. You do have to remember as well to bear in line with disclosure, that if there are codes required for items which are not going to be disclosed, so military assets and so on, whatever the government doesn't want to disclose, then you need to give separate codes to those. Once again though, good budget codes, if you have codes which are there for your assets, bearing in mind that we're going to upload our assets into a universal system, so we'll go into our asset module, then you can use the codes from there, and then hopefully you'll have everything in place. If we're just talking about our chart of accounts for our accounting system, though, you will need new codes for certain items which didn't exist before. Your human resources liabilities, so your pension liabilities, your unused annual leave liabilities, and so on. These items will have to be brought in, and so therefore your chart of accounts will have to have additional pages to show what these items are. Okay, once again, when you're doing a project, you're going to be there for probably a couple of years. So to spend a week or so on this really isn't a big amount of time, but can't reiterate how important it is to get people into the process with you who really know what they're talking about. And it is actually so hard wherever you go, and even in Western countries, so hard to get someone who actually understands how the budget system works, and then with your budget, how that then ties into the procurement system, and how the procurement system ties into the treasury, and then how the treasury ties into the accounting. If you don't get that process right, then you're going to find down the line when you start trying to change things that they won't change. And if it's obvious that you didn't realise these things, then the sad fact is that you're going to have to go back and change your plans rather than other people. There will be places where people have to change. If we're looking at control of an asset, so the owner of an asset is Ministry A, but the controller of the asset is Ministry B, then usually you'll find that you have to change the law which allows that to transfer in the books and records. If that happens, then you are going to have to go through the legal process. And going through the legal process is something that you will have to do, and once again you need to be guided by someone who knows what they're doing. Okay, those are our 3 pillars. That's your standard 3-pillar system that you've got there. Know it, love it, and understand it. So we look first up therefore at the 3-pillar system, which is a fairly standard system. I think almost every country has this, and the challenges that brings to you. So the key to the 3-pillar system is just learning exactly how it works and understanding the linkages between the 3. If you don't understand those linkages, you're going to design a system that doesn't work effectively, or God forbid, actually makes things worse. Now what we're going to move on to with this slide and the next slide is looking therefore at the actual barriers to implementation. So when you go out there into the field and you begin your implementation, what's going to slow you down, and what can you do best of all to overcome these kind of implementation issues? So the first one that I've got on my slide there is lack of infrastructure. If you go to countries where there's a relatively low population and a relatively large geographical mass, you're going to have problems with infrastructure. This particularly will happen in countries which are not so well developed. Moving towards IPSAS implementation as a way of building business, as a way of attracting external investment into their country. The biggest problem that you get now in the 21st century is problems with the internet. I mean, certainly in one country I worked in, where if it rained, the internet used to go off, and everybody used to go home. So unlike the sort of 1970s and 1980s when we just pushed on through, now these things are absolutely critical. So our situation therefore is probably that we've got lack of infrastructure, and infrastructure is going to be in terms of IT. How do we measure this? How do we build databases? And how do we communicate that information? the first thing you can try to do is to try and get it improved. If the government has money and if there's budget, then you have to be careful here, because presumably you're asking for money which isn't included in your IPSAS budget. The selling factors on this are that the improvements in infrastructure will improve the functioning overall of the organisation. So IPSAS will have this knock-on good effect. In addition to that, and we put on the slide, it improves business, it improves tourism and so on. I mean, the other things that we're seeing at the moment now is we're seeing that Google, for example, and I think Facebook is investing money in drones. And the point that these drones are, what they're going to do is that they're going to beef up internet provision to areas that don't have it as good as you would expect in a normal country. Therefore, by hook or by crook, by using your charm, you've got to try and persuade people that we need to provide computers, we need to provide internet access, we need to provide Microsoft Office or some other form of database management system. We need to, presumably if there's an ERP, therefore then they need to have access to the ERP. And if you have an ERP in the internet suite, there's nothing more annoying than sitting watching that little circle go round and round. But we've got to get this going. If you can't persuade the government to spend enough money, and sometimes it's millions and millions of dollars, then you have to kind of be a little bit creative and work out what you can do. In certain circumstances, we've certainly had to come down to using paper. So in other words, we've had people actually sending in details written on pieces of paper. And if they do that, and they can't even fax them, they have to send them to the post, then you just have to adjust your system to cope with that. But the lack of infrastructure should never be a reason not to incorporate IPSAS. Because if you bring IPSAS in, what it will do is it will increase the pressure to get the technology that is required. And then those things will come faster. And you can often get people to donate and so on. So, our first point therefore is lack of infrastructure. And lack of infrastructure means this idea that people don't have computers, that people don't have access to the internet, and so on and so forth. And we put on the second one, which is realistically the same point again, with lack of infrastructure, improvements in the IT system. But here what we're talking about as well is the greater ERP. And I wanted to extend this because the other big thing, and that's why it's a separate point here, the other big thing that you can do is you can persuade someone who's at that kind of prime ministerial level in the Prime Minister's office that this is a good idea, and that therefore they should put pressure on other ministries as well. Because remember, if you're looking at assets as the Ministry of Health, Ministry of Education, it's not just the Ministry of Finance. And so therefore, the benefits that come from IPSAS will improve the information provision in all of these other ministries as well. If you're in a country like this, if you're in a country where there is a shortage of these things and you're banging the drum, you've got to get your IT system, you're probably talking to people who know this. And therefore, in that, you kind of have to listen to them as well, and they will tell you, well, this is timetable for a year's time, this is timetable for 2 years' time. We're getting reconditioned computers through the IBM or someone like that. You just have to do your best. But it does make it very, very difficult, because the other thing that happens, if people send in what's written on pieces of paper, you have to have a processing unit in the capital, in your head office, who then process the pieces of paper. And you have to teach the people out in the field, which is hugely difficult if they're spread all over a country, to fill these bits of paper in properly. And then you have to teach people in the central office how to interpret them properly. And we have had issues where they speak different languages and don't understand each other as well within the same country. So your lack of infrastructure, particularly computers, IT, having a computer, having access to an ERP, having an effective ERP, and then your computer being able to communicate with other computers. You need to put pressure on them to get that and to do it well, basically. Because if you put crap into the system, you'll get crap out. Right, cost benefit. We talk about other barriers to implementation allows better decision making. Right, what you're gonna hear is that the decision making is fine. It may very well be fine. No one understands a country better than the people that live and work in it, particularly the government. The problem is that so often with these things, it seems on the surface that everything's fine, but then when you start to get more information, you realise the mistakes that you're making. We can produce endless numbers of statistics about the benefits that have occurred because of IPSAS. and again, I don't really want to use that word IPSAS. I want to use the word benefits that have occurred because of improved information provision. If you sit down with the guy who's at the vice minister level, or you sit down with the guy who's at the department head level, I can promise you that there will be 25 things that they wish that they had. If they had a decent ERP system, if they had a decent data management system, so in other words, a system that can provide the information for IPSAS underneath, and you've got a textbook that shows them how to write SQL, that you can guarantee that they can get what they need out of that system. And that's where it all comes from. How a Ministry of Finance functions without a modern 21st century balance sheet, I actually have no idea. How you can run a country when you don't actually know what's there. And that's the question that you need to ask. And you can be a bit more cunning as well, in terms of the way that you word these things. At the end of the day, a government is going to be around forever. Therefore, if we accept that IPSAS is better than what they've got already, the time frame is forever, so it must give a positive benefit. It can't not give a positive benefit. So, better decision making, it'll pay for itself. That's your first argument. Second one, cost benefit. Very, very often you'll come across this idea that we don't want to do that or we can't do that. There are factors in individual standards that we don't like. Disclosure is a common one. Disclosure is one that people don't want to disclose certain levels of assets. Another one that you'll get from politicians are, we hear you, we think it's a great idea, but we have so many decisions to make. If we adopt these IPSAS things, then the whole legal lawmaking process is going to get chewed up with making amendments to them, making changes to them, listening to criticisms of them. And while it is important that we have good information for decision making, the information we use the information process to make decisions. The decisions shouldn't all be about the information process. And this is what every country in the world does now, and it's what it says on the slide, and that's that we adopt national standards. So then you can have an update process, you can have a review process, you can have an amendment process, and you can timetable all of these things. Many governments do this, and Kazakhstan, we did this. We just set up a 2-year amendment process. So there is an accounting development department which consists of 10-15 people, and they review these things and they follow the latest trends and they see all the changes, and then they prepare one packet of documents and it goes through, and they make all those changes every 2 years so that it doesn't chew up the legal process. Other things that are issues, things like fixed assets, particularly valuation. We'll do a whole section on valuation because of the issues that come up. You have a country that's mineral rich but doesn't have that much cash in the bank. They probably don't even have a valuation department. The standard allows you 5 years. Excuse me. The standard allows you 5 years to get your fixed assets up to date. 5 years is just unrealistic in terms of spreading the cost of the work that needs to be done. If you have a national standard, you can put a 10-year timetable in there. So, because what a Minister of Finance doesn't want to do is to enact the world is going to adopt IPSAS, and he adopts IPSAS and then gets a qualified audit report because he hasn't had all of his assets valued. You adopt national standards, and then with the national standards you can change the national standards in the future. And so you can do some kind of like left foot, right foot, where you're making one step forward over a number of years. We don't have to take the full cost in at once. So the fact that we don't like a particular part of an IPSA or a standard is no reason for us not to adopt. And the last part goes along the same idea. We have countries where your feasibility study looks at it and then I mean, there's no point in arguing this factor for whatever reasons, for appetite, for sums of money, for resources, for education of people, for infrastructure, put all the things together. It's a pointless exercise because what you get out at the end of it won't actually provide you with anything of any benefit. What we can do is we can put those people on the right path. So we can say to them, well, if you start taking small steps along it, then you can start to reap the benefits without really hitting the hard cost. And then when you're better positioned to do that kind of donkey work, you can do it in the future. And the easiest way to do that is to start with cash. And as I said, in my experience, we did this in Kyrgyzstan. Kyrgyzstan was ready for full accrual accounting, but it will be one day, and they're doing their best to bring it along. Excuse me, but But at the moment, we've just left them on the cash basis, and the cash basis is good for them. They have a cash system, so what we do with the cash system, therefore, is you set up the disclosure requirements, we collect the information, and their cash system provides 80% of the information that's needed. The other 20% is progress, and then at the same time, we can have departments beginning to calculate accruals, beginning to look at financial instruments, beginning to make sure that all of your assets are gathered, and those guys are working at their own pace in an acceptable financial manner, and they'll get there. You know, the whole thing will get there in the end. And when they're ready, they'll make that step forward. So that's a possibility as well. This fact that they're clearly not ready, but we can still do something to get them moving, to get them being positive, and to get the momentum going. And taking your time is a good idea as well. Okay, we've got a few more on the next slide, I think. So moving on to slide number 4 now, we are looking at barriers to implementation. So we already looked at 4 or 5 of them when we looked at the last slide. Therefore, looking at this slide here, you can see we have another whole list. Right, the first one on our list, we're looking at cost benefit here, and we're saying that we're using IPSAS as a reform tool to correct other issues. Right, what does that mean? Right, we use IPSAS therefore as kind of a broom, and that broom is to clear up other problems and issues that we have with our Ministry of Finance or whatever, particularly where we would see these kind of things, so where we've seen them in practice in governments, tidying up disposal procedures. Governments, obviously it's public money, often have very, very tight and rigid disposal procedures. The problem with that is that you end up with people just not following them. So as I think I said earlier in one of the other presentations, we ended up with 10 years worth of crayons in the balance sheet of the Ministry of Education. When I was at the UN, we used this as well to clear up certain reporting requirements for money that they had given to beneficiaries. So you give money to a third party to undertake a project. IPSAS was kind of used as a justification for tightening up some of these procedures and these reporting requirements. They have nothing to do with IPSAS whatsoever. But as you're going through the IPSAS process, it will highlight problems and issues in areas where we could be more efficient in other areas of the business. And IPSAS, so therefore IPSAS itself, while they're not direct IPSAS issues, will bring other benefits into the picture as well. And we see that a great deal wherever we are. You know, introducing a new ERP system or an update to the ERP system because we have IPSAS also allows us to do, you know, scheduling systems of the judiciary, to update all sorts of areas of government operations where computers are used. And IPSAS therefore being a tool that does this for us. So barriers to implementation, the cost benefit doesn't exist. Well, it does, and it'll even stretch out and beyond the obvious immediate area. Other barriers to implementation, we have too many people to train. Right, you hear this wherever we go. Kazakhstan has 75,000 accountants. I think Kyrgyzstan has another 20 or so. The areas that we worked in, I think that the UN office I worked in only had a couple of hundred, but they were spread across 800. They were spread across 80 offices across 4 continents. It doesn't really work like that. As far as the training can go, for the people who are down on the ground, you can do a fairly basic level of training. You can provide them with written documents, so what we used to call statements of practice. Then you just take screens. The screen, therefore, they enter an invoice into the procurement screen, and then the system itself will do all of the accounting itself. So you don't need to have people sitting in long lectures on impairment of assets and so on. You give the people an instruction manual, which is easy to follow with lots of screenshots. You don't even need to be that good at reading English. They follow the screenshots for the various circumstances, and you're away. You can have helplines, so that you'll always get people who, oh my god, I can't do this, I have to talk to someone. But you provide them with a helpline, and you know, you can have 20, 30 people there the first day, then it drops by a couple of people a day until you get down to a hardcore. Because once people have done something once, then they won't call again. You can have webinars, and so with your webinars, you're instructing people, and then you have question and answer sessions. Now, working at the UN, we used to do them in the middle of the night for people who were in Indonesia. Then we do one in the middle of the day for the Americas, and then one in the afternoon for people coming behind us. Once again, you know, with your webinars, you're contacting a lot of people. And now with webinar systems, even simple systems like Link and so on, people can shout in their questions. Because if you've got a guy sitting in Bolivia who's got a question, you can guarantee that the guy sitting in Senegal's got the same question. So once again, the use of technology is so far forward now that you don't have to have such vast sums of money. And if you are giving people computers, you send them an email and the manual's in the email. If they really have to, they can print the thing in the office, but a lot of people won't do that. So you can get to people in very, very imaginative ways. And for the great bulk of people, if you've got 75,000 accountants, the chances are that 60,000 of them actually don't need any specific IPSAS training whatsoever. That's only for the people who are higher up. It also says there, doing things like assuming that opening accruals equal closing accruals. We did that very, very much. If you've got the rent of an office and you've got a 10-year rent on an office, if you've got water and so on, you just simply assume that the opening and closing accruals are the same, and you're staying on the cash basis. So for all of these transactions, there's actually nothing that people really, really need to do. The other thing as well is that you can have everything on a cash basis, and then you just have a small team in a regional office, and then they can put the accruals through and check the accruals. The area that tends to give you difficulty in real life that we found is assets, people following what's happening with assets. And you'll have to train your assets team. They need to be quite good. Right, so too many people to train, never had a problem with that. Right, our people are not ready. That is absolutely so not true as well. You get this from people at head office, that the people in the field are not ready. Happens all over the place. And it is just so not true. The number of people in the field who are just so desperately keen to know about this stuff is vast. I've never had any problems with any of this wherever I've gone, that people are just kind of like not smart enough. It just doesn't work at all. It doesn't work at all. The people in head office just don't have enough confidence in them. Tends to be that more what you hear is that errors occur in the field because they've never ever had any training. And this isn't just an issue with governments in developing countries, it's also with much more advanced countries, that the people just never ever get any training because of the cost or whatever, and because they never ever get any training, or because their boss doesn't want them being off work, or just doesn't push hard enough, right? So if they tell you that the people are ready, just say yes they are, because they are. With all things, I guess, with our people, that you do get different levels of enthusiasm. We tended to find, particularly when I was working in Vietnam, that we ended up with the younger people who were very, very keen. The younger people had a much more flexible mentality to ERP systems. They could use Excel and so on. And they were very, very keen to learn. So they ended up being the leaders. And it was hard because the culture of the country is that old people tell young people what to do, but the young people were streaming ahead. So, training. Right, barriers to implementation is lack of support. Right, there's two things with lack of support. The first one is at the top. You have to get people who are senior, who are in a position to support this thing. If you don't, then nothing will happen. You'll ask people for information, and they won't provide it. You'll ask people to do things and they won't do it. And if you don't get senior staff, because they're obviously busy, they shove it to the back and so on, so they don't come to the meetings, and the whole kind of thing will drift. You have to get senior staff involved. Again, where I've been involved in developing countries, it hasn't been an issue. The Minister of Finance or someone in the Minister's office has taken that decision that the money is going to be spent. They come with a list of what they want, and then if things begin to grind down, then the phone calls start, and bingo, everything picks up again. One organisation I was in didn't have a lot of support or a lot of interest, and it did a little bit. You kind of really have to address that, and you have to shout in people's faces a little bit and get in there. But identifying champions and so on. The other thing I would say is that champions come from strange places. Because with IPSAS, what will happen is, because people understand that the whole system is changing, you get a lot of fear. So you'll get people popping up out of the woodwork that you wouldn't necessarily expect. The Minister of Libraries or something takes a huge interest in this because he just simply doesn't know what it is. And the rumours are going around, and the rumours will spread very fast about this. And if you can make him a champion as well, and then look at the Ministry of Libraries, look what they're doing, look how far ahead they are, and then it will drag others along because it just makes them look bad. And people do discuss this stuff. So be flexible, but ultimately, if you don't have any support, it's a long, long, empty and slow road, and you kind of have to push for that. Support from the top is probably more important, but not far off it is support from the bottom as well. You're going to be asking a lot of people who have a job to do extra work. And so you need to buy into those things. Again, if we're looking at IT systems, you will get the enthusiasts. There will be the early adopters, as they're called, who will come out and will be very keen to get involved so that they know everything and they can produce the reports and the spreadsheets faster than everyone else. But you're looking at a big area, 47 ministries or something in a normal country. So if you're looking at that, you have to think about how you're going to reward these people. And thank you's nice, but in many countries when staff are putting in extra time, it's made a deliberate part of their job description, but they get a little bonus for it to say thank you for the extra work. So try and make sure that everyone's aware of just exactly what's going into this, what's involved. It's better if you can take people on secondment. So the Ministry of Education provides 2 people, the Ministry of Labour provides 2 people, and so on. And then you get a team. But it's not absolute that that's really what's going to happen to you. Okay, you've had 2 slides there with something like 10 things which are barriers to implementation, which you should be ready for. Barriers to implementation are real. There is not much point in going into this if the government has $0 in its bank, or it's going to go to war or something. So you have to be careful, and this should be covered at feasibility stage. If it's not a realistic process, don't start. If it is a realistic process, but we can't really timeline it to get to accrual accounting, but we know that we can take the steps to get to cash accounting, then cash accounting is the way to go. And it's a good way. And never forget that certain countries like Japan and China have come out and said that they don't think accrual accounting is suitable for government. They think cash accounting is better. So I wouldn't push that out of the way. Okay, there you go. You've got 10 things which you can kind of expect to happen to you along the way, and a number of more that will come out as well. Okay, good luck with those.